My next guest is Ryan, and how do you say your last name? I know I say it right. Maybe Funderburk.
That's
How do
right. That's
That's
right.
right.
Funderburk. Mm-hmm.
Funderburk. Okay,
Mm-hmm.
yes, Ryan Funderburk with Regions Bank, and
That's
so
right.
super excited because Ryan has helped me with one of my beach my client from out of town who bought a Portofino and just really was pleased with his customer service. And I just was referred by one of the realtors that are actually that actually are agents with the Portofinos. So just was very, very impressed with your service. You made sure that everything ran smooth, and then come to find out, you really specialize on the beach properties. And I want to speak out to the investors that are out there, or even homeowners that want to make the beach lifestyle now their home. And so, if you would just share a little bit about your, your company, that Regions Bank, and if you have the niche product, which I know that you cater to the beach properties. So,
Mm-hmm. Well, I appreciate it. I appreciate the introduction. I appreciate you having me on your podcast, most definitely. So, as you alluded to, we do specialize in several financing opportunities, mostly geared towards some of the more affluent buyers, or rather, that's the area that I focus on, is those more affluent buyers. So, but as an institution, Regions can accommodate several socioeconomic classes, ranging from your lower to moderate income borrowers to your first-time home buyers to your more well-to-do folks who are looking to spend million, 1.5, 1.8 million dollars to buy the luxury homes and the luxury condos. So um, again, that is the area that I try to focus on, and I can offer and I can accommodate not only primary residents, but also I can do second homes or vacation homes, whichever you prefer to refer to it as. And then lastly, I can do investment properties as well. So we can do any of those three. I do think it's important to for consumers to understand that if they purchase a vacation property, it is okay for them to purchase it with the expectation that they are maybe going to rent it, whether it be Airbnb for, you know, 49, 50 months, or excuse me, 49, 50 weeks out of the year, and just plan to occupy the dwelling for, a week or two realistically. And that's not too much to ask. I feel like for folks to use their quote unquote second home for. So
mm-hmm.
that can be a misconception from time to time, and I do just want to let folks know that hey, it is okay for you to purchase this home, for it to be considered your second home, whether you live in Texas or Louisiana or Tennessee or California or anywhere else. The general rule of thumb is just that it needs to be a minimum of 50 miles away from your primary dwelling. So if you have folks that live in Tallahassee or Jacksonville, that are maybe interested in the Pensacola Beach area, then we can accommodate that. And it doesn't have to be considered an investment home. It can be considered a vacation property. And the reason, Karen, the reason that's important to know is because as a mortgage lender, we take all properties and occupancy types, and we kind of categorize it into three different thresholds per se. So, of course, you've got your primary dwelling, you've got your vacation homes, and you've got your investment properties. Okay, and of course, the primary dwelling is the quote unquote lowest risk from a lender's perspective, and the
Mm-hmm.
investment properties are the highest risk from a lender's perspective. And the second home is kind of somewhere in between. And the reason that's important for consumers to understand that is obviously from the barrier to entry cost, the upfront cost, whether it be lenders fees or discount points or interest rates or all of the above, because we're obviously in a very volatile market situation right now. So Of course, as regions or any other lenders, as our costs go up to loan the money, we of course pass that cost on to the consumers. So again, we want to make sure that we minimize that cost for not only ourselves as the lenders, but thereby we're minimizing the cost for your customer, your client, your buyer, our borrower, our mutual client, because we want to create an opportunity for them to be most successful with their endeavor, which is more often than not to um, attain property to create generational wealth, of course, right? Um, so anyhow, diving in specifically to our market here in the Pensacola area, specifically Pensacola Beach. For those who are locals, they understand that Pensacola Beach is a part of Santa Rosa Island. For those who are
Mm-hmm.
not locals, just so you know, Pensacola Beach is part of an island. It's referred to as Santa Rosa Island, which is governed by Santa Rosa Island Authority. And the reason it's important for you as a realtor, for your buyers and your clients to try to utilize us, myself, other local lenders within the Pensacola area, is because Santa Rosa Island is a little bit different. And when I say different, it is leasehold property, it's leasehold land, right? Um, and there may be some savvy folks out there that say, okay, well, my guy, my normal guy, that's at my local credit union, he can do leasehold land, no problem, no issues, right? And I get that, right? But Santa Rosa Island is a little bit different because not all leaseholds are created the same. All right, so what makes Santa Rosa Island's leasehold a little bit different, and I apologize, I'm looking at my notes because I want to be able to read it verbatim and not misconstrue. But what makes Santa Rosa Island leasehold different is the existing leasehold agreements require a fixed annual payment, and they are exempt from ad valorem and property taxes. So up until 2 or 3 years or so ago, Fannie Mae was okay with that, and Fannie Mae is kind of the shot caller with the mortgage industry. Typically, what Fannie Mae states is standard policy. Even for myself as a portfolio lender, a lot of times our portfolio guidelines will run parallel to what Fannie Mae states, right?
Sure.
Obviously, we can make certain caveats, and we can recognize a market, and that's what Regions has obviously done. We've recognized that the Pensacola market's a little bit different, a little bit unique, so we're able to cater our our portfolio loans to try to accommodate this. And the reason that's important to note, again, going back to your out-of-town clients, your out-of-town buyers who think that their existing mortgage person that they've got an established relationship with, again, that established relationship, that mortgage lender that they're accustomed to using, they may be able to do leasehold land, but 9 times out of 10, they have to pull the plug at the final hour, and it leaves everybody scrambling. It's got upset buyers, it's got very upset sellers. Obviously, it gives gray hairs to the buyer's agent and the listing agent and all parties involved. It's just not fun.
Yeah.
I'm sure you've maybe been a part of that. Certainly, I've been a part of that before, trying to have to come in at the final hour and save the deal. Which I never mind doing, but I would rather try to prevent it than save
Absolutely.
it.
Yeah.
Um,
Absolutely.
just because, we don't want that added anxiety. So, obviously, you and I have worked together in Pensacola Beach before. You're familiar with kind of my process. Um, you mentioned Portofino already. Yes, we can do Portofino. We've got all 5 towers. Once they start building Tower 6 and 7, we're on board to finance within those properties as well. But I do also want everybody to be aware that, hey, we're not a one trick pony. I'm happy to finance anything inside of Portofino. But anywhere else on Santa Rosa Island, I've already gotten probably 90 or 95% of those condo
Wow.
complexes approved.
Nice. Mm-hmm.
Um, And the reason it's important to understand that I've got the condo complexes approved is because whenever you've got a customer or a buyer that's interested in a condo, that's very different than a buyer that's interested in a single family dwelling. And I know
Mm-hmm.
that you know that, Karen, but I'd like to still explain because you can have a rock solid buyer. They can have all their ducks in a row. They can have planned and saved and set everything aside, and they could be the absolute perfect buyer. But they could be trying to buy a unit inside of a project or a condo complex that does not necessarily have all of their credentials and their financials together. Whether that condo complex doesn't have sufficient insurance or sufficient reserves, or any combination. Maybe they've got outstanding, um, I'm drawing a blank, maybe repairs from a storm or any other projects that could be outstanding. Special assessments is the term. Maybe they've got a special assessment that's going on, because that's a special assessment doesn't necessarily disqualify as long as they've got adequate insurance and adequate
Mm-hmm.
representation, in the event that's what's going on. So regions, we're able to kind of come in and we look at the grand scheme, we look at the whole picture, and we say, okay, this is what makes our borrower strong. This is what makes the condo either strong or not so strong. And then we can make an independent decision and say, okay, we've got compensating factors. This borrower's got more than enough as a down payment, even though this condo complex has some maybe things that we're not so comfortable with, but this
Mm-hmm.
borrower is strong enough to overcome that. Versus if you're looking at a traditional type of Fannie Mae loan or VA loan, I don't want to pick on Fannie, uh,
Yeah.
but whatever the case may be, we're able to step in and make an individual assessment. And it gives us the ability to say yes when others may say no.
So wouldn't that hinder though the buyer from buying that certain condo if that complex had issues and special assessments? I mean, I would just think that the buyers knowing that you have to tackle the issues and try to balance and because they're a strong buyer. Have you seen buyers back out because of the complex being having issues or needing special assessment repairs?
Well, sometimes the buyers are uncomfortable. Other times it gives I'm going to pass the buck on to you as the realtor. Other times it gives the buyer's agent an opportunity to go to the listing agent or the seller, and say, hey, listen, you know, this could be a 12 or a 15 or a $20,000 repair, and my client is coming into it. The damages were done before my client took possession of the
Yeah,
property.
yeah.
So although these special assessments are outstanding, it should be the responsibility of the seller. It's just like any other situation to where,
So
if you,
everything will be negotiable then. It could be
correct,
negotiable. That's where our
correct.
art that's where we stand in and try to negotiate those issues. So, okay.
That's correct. And if you think about it, that's really no different than say, if you've got a single family dwelling or single family residence and say it needs a new roof. That's not on the
Yeah.
buyer to replace, that's on the seller to
Right.
replace.
Yeah. Yeah, that's right.
Obviously, if a condo complex needs a new roof, I mean, the seller has no control over that, but they can say, okay, listen, I know that my portion of the cost is going to be $12,500. Let me offer you that as a credit towards your closing cost and your
Yes.
escrows or something
Right.
like that.
Yeah, that's good.
Um,
Everything is workable.
Correct. And really, as from a lender's perspective, what we want to see progress. Okay, so for example, here we are. When was Hurricane Sally? 2021, 2020, something like
Yeah, a
that?
couple of
I
years
don't
ago.
remember.
Mhm.
A few years ago. So
Mm-hmm.
if if you were to come to me tomorrow and say, hey, I've got this condo complex, but they've still got damages from Hurricane Sally and they haven't
Mm-hmm.
even started making repairs on that, I'm gonna have some questions about that. It's been 2.5 to 3 years. Why have we made zero
Yeah.
progress? Do you
Right.
know what I mean?
Right. Yeah.
Versus if it was a hurricane that hit 30 days ago and they said, okay, listen, we've got a bunch of repairs, we've already got quotes, our insurance is sufficient to cover X percent. Our owners are going to cover the difference. We're going to split it up. It's going to be, $7,820 per owner. And we've got these estimates back. We intend to get started in the next 45 to 60 days. That's no big deal. We can
Yeah.
work with that. It's those long outstanding and those long pending situations that
Yeah.
makes us uncomfortable.
Right. And that makes sense. With time going by and they haven't done any kind of repairs or anything. And I'm thinking that it's more a homeowners association issue too. So I know that
Well,
kind of plays
correct,
into factor with that because
correct,
it's
absolutely.
very important that we all get our documents with the condo docs and the HOA docs.
Hmm.
So a lot of times, I know my broker has always emphasized, make sure you get the minutes that were discussed at the last meeting. So all that does play into factor, and it's really interesting what you shared. I appreciate all that, and you know, uh, if some of us realtors are wanting to farm, the Pensacola Island, the beach, Navarre, all that, it really is an interesting fact that we really have to know of the leasehold, the leasehold land that what you explained. Very interesting because some out of towners understand that because out in the mountains, I've had a couple of clients where they do understand that, and I didn't have to explain. Don't worry, don't explain. But you really explained that thorough, and I know when the time comes, you probably run into that trying to explain to your clients as well because that really is a big factor, owning a condo on the beach, especially Pensacola Island, moving into even Navarre.
Because essentially, what it is although you may own I don't want to say you own the rights because you do not own the rights. You lease the rights. Now, those leases are signed for 99 years. And,
Yes, that's what I
each,
heard, which is kind of
yeah.
laughable, but it's like, okay, well, that's what they say. So,
Hmm. And,
and
and
I
I'm,
hope
I'm
we all live to
interested to
99
see.
years old
Right.
if we own
Well,
a
these
condo.
some of these were signed in the 60s and 70s,
Yeah,
and the
yeah.
general rule of thumb is that the lease has to, um, live at least a minimum of 5 years longer than the loan term. So if we're doing a 30-year note, well, the lease has to survive for at least 35 years beyond the conception of the new loan.
Wow.
So, um, you know, on some of the single family dwellings out on Pensacola Beach, I found that that's not that big of an obstacle to overcome because, if it's a single parcel and one quote unquote owner, they can sign a new one. When it's the condo complex, I haven't had that issue yet, so I can't really
Hmm.
speak to it.
Yeah.
Um, and I don't expect that to be an issue for probably 5 or 8 more years, and then we'll have
Hmm.
to start, figuring out where we're going to go next, specifically the Santa Rosa Island Authority. And it's interesting because our neighbor to the east, Okaloosa Island, which is
Mm-hmm.
just a couple counties over, they were also leasehold for a period of time, and I did finance a property over there 3 or 4 years ago, and they were, rather than renewing the leases, they were converting over to traditional fee simple. So I'm
Wow.
interested to see
That's
what
great.
Santa Rosa Island will do. Right.
Well, everyone's wanting to move to the beach, and hopefully that will
That's right.
turn that way. That would be a benefit for all homeowners. But I could see that happening, but I don't know because there's so many people wanting to move to the beach. So
Right.
it'll be interesting in a few years to see what they'll do. But I
Sure.
appreciate all this info. Again, you are the go-to guy for anyone that comes to me that wants to buy a beach house or a home on the beach. Again, you've done excellent. You have excellent customer service, and I just look forward to the future because again, I know a lot of people are wanting to move here, and especially on the beach. So, Ryan, I appreciate your time. And is there any words of advice or any words of wisdom to our potential clients in the future?
Well, obviously, trust your realtor. Don't
Good
necessarily
deal.
trust, yeah. Don't necessarily trust your friend or your in laws or your mother. Like that. And I
That's
don't
funny.
mean that as a slight to anybody's personal relationship with their family, but
Right.
you know, nobody knows Pensacola Beach better than Karen Cobb, right?
Okay.
Do you
That's
know
my
what I
back.
mean?
That's my playground. Yeah.
Right, it
Yeah.
is. It's where we
But
live. Don't, and we've all been in the situation where we've got these folks that, yes, they want to buy. They're so eager to buy. And then you tell them, okay, listen, we got multiple offer situation. And then they say, offer them $3,000 under asking price. And you're over there banging your head against the wall thinking, okay, thanks for making me drive around for 6 hours, right? So my advice: listen to your realtor. Listen to Karen. She's a seasoned expert. She knows what she's talking about. She's not going to deliberately waste anybody's time. She's going to give you good advice, and she's going to have your best interest in mind. Secondly, I do want to mention, and Karen, I know that you know this, but I want to say this to the world. You know, I'm not a mortgage broker. I'm a mortgage banker. I work for the bank, and I can lend in any of the 15 states where you find a Regions
wow.
Bank.
Nice.
Um,
Okay.
mhm. I can actually lend in more than 15 states. Regions is in 15 states. I think I can lend in maybe 17 or 18 states.
Wow.
But the reason
Okay.
that's important is because, Karen, I know you've got your license for
Yes.
Alabama.
Yes.
So, and obviously, the Gulf Coast and Alabama's beaches are just as beautiful as Florida's.
Mm-hmm. Mm-hmm.
So, whenever you have folks that are in between Florida or Alabama, you know, if they consider me, just know that I can be the one-stop shop, and that's
That's
what I'm
right.
trying to say. You don't have to get a Florida guy and an Alabama guy. If you
Yes.
come to Ryan Funderburk at Regions,
That's right.
I can
Yes.
I can work in Florida from anywhere within the state, and I can work anywhere in the state of Alabama or Georgia or anywhere else.
Wonderful. Like I said, you are my to go guy. So
Well,
I
thank you.
appreciate you. I appreciate your time. So glad that you are licensed in Alabama because I am going to try to market myself in that direction. But yes, so thankful, and we'll just keep in touch. And again, Ryan Funderburk is just on my top three list of lenders. And again, I appreciate your time, and we'll just keep in touch.
Okay, sounds good,
All
Karen. I
right.
appreciate you having me on.
Okay.